Welcome to your Wednesday edition of FreightWaves Now. I got some really exciting news from Seth Holm regarding earnings season in the transportation sector. But first, let's hear from Nick Austin and what's happening with the weather.
Welcome to FreightWaves Weather, your Wednesday edition. I'm FreightWaves meteorologist Nick Austin. The big weather story today, the nor'easter that is going to be developing pretty quickly from late today through the day on Thursday. So we're talking about a really good chance here for delays not only in ground transportation and ground freight, but in air cargo too, from New England down to parts of the mid-Atlantic coast. The worst of the storm, and it'll start to get really bad tonight, overnight and into the day on Thursday, but it's going to start developing off the mid-Atlantic coast later this afternoon. So that'll affect parts of the Delmarva Peninsula right here, northern New Jersey and Long Island from late today and beginning this evening, and then heading into New England rather overnight and through the day on Thursday. But the worst of any possible wind damage as far as power outages, downed trees and power lines, possible roadblocks, things like that, and coastal flooding, the worst of it's probably going to be along the New England coast, eastern Long Island up into New England, so places like Newport, Bridgeport, Connecticut as well, and even the Boston metro area. And further out into Cape Cod, Martha's Vineyard, areas like that, up along the New Hampshire and Maine coastlines as well, and then up into the maritime provinces of New England. That's probably where we're going to see the most impact for the storm. Luckily, not widespread impact. It'll mostly be confined to coastal areas and some parts of the I-95 corridor, and that's because the center of the storm will be just a bit offshore. So that's the good news. The kind of silver lining with the storm is that we won't have widespread damage and just days and days of disruptions across all of New England and the Northeast. It'll be kind of confined to those coastal areas and just inland of those coastal areas from eastern Long Island to New England. So next we're going to go out west where it's actually been too dry. We have severe drought. Parts of the Great Basin in Nevada, up into southeastern Wyoming, across many areas in Colorado too, where some wildfires are already burning, but we could see new ones spark because of the really dry conditions. And those new and existing fires over the next couple of days could spread really rapidly as well because the winds will be picking up. We could see gusts of 40, 45 miles per hour across parts of this region. So that'll produce smoke that could reduce visibility on the highways out there, and it could produce crosswinds and headwinds that'll give truckers out there a lot of difficulty too. So be careful across that region the next couple of days. Last, we're going to go down into the Gulf of Mexico, specifically the Bay of Campeche right here off eastern Mexico. And we have a cluster of showers and thunderstorms. It's not really organized right now, just a cluster of storms off the coast of Veracruz, Mexico. But the National Hurricane Center, over the next couple of days, it has just a 30% chance that this will become a tropical depression or the next tropical storm, and moving off to the north and east into the Gulf of Mexico. But from this weekend into Monday, those chances go up to about 50%. So we'll keep an eye on this. Even if it doesn't become a tropical storm, it still could really drench parts of the Gulf Coast heading into next week with a lot of heavy rain and possibly some gusty winds. So we'll keep an eye on that. That's what you need to know about your weather for your Wednesday. Be sure to subscribe to our YouTube channel to get all of our videos, and be careful out there.
Welcome to your Wednesday carrier update, sponsored by Powerfleet. My name's Kyle Cunningham. Let's talk a little bit about what's happening in regards to volumes all across the country. Taking a look at these tree maps here, your outbound tender volume index at 10,012, down 1.4%, approaching that baseline of 10,000. If you're a daily watcher of FreightWaves Now, you understand that 10,000 was the base point set back in March of 2018. If we take a look at the various markets across the country, the different regions, we can see that the Midwest region providing the most outbound optionality, down 0.4%, down the Southwest region, negative 15%, and negative 122 on the head haul. So indicating there's a lot more inbound volume into the Southwest versus what's coming out. If we take a look at what's going on in terms of Decatur, Alabama, we can see down here the outbound tender lead time 2.14 days, up a little bit. Head haul, a little bit more optionality heading outbound. Take a look at this chart of the outbound tender rejects. From May to where we're at now, you can see big moves up and down. Very important here, as October comes in, we see it go from under 5%, over 8%, back right down, and then now we're back up at 7.87%, possibly keep running up. So if you're in that northern Alabama market, be sure to understand that your capacity is a little more valuable today than it was yesterday. Moving over, we can see out west in Las Vegas, Nevada, no gambles again today, 8.94% on the outbound rejections. I've boxed these out here to show you exactly what happens in regards to these big run-ups in outbound rejections when the capacity tightens and when your trucks become more valuable. You can see this generally happens almost on a monthly schedule. In the month of June, it was a slow climb up. August, a big spike. We're due for another big spike in terms of a capacity crunch in Vegas. So if you're there and you see the freight out there, understand that you're going to be able to get a little bit more today than you have previously. To close it out, let's take a look and see what's going on. Twin Falls, Idaho, reefer outbound tender lead times, 5.8 days. Loads are booking out in Twin Falls almost a week in advance. So keep that in mind if you're heading into that market. Van outbounds 2.2 days. So big difference in regards to that. Outbound rejects, reefers almost 30%. That's about 1 out of every 3 tenders being rejected. For the general market, 12.79. Twin Falls, a beautiful market with some beautiful volatility behind it. As always, thanks for watching your carrier update. We'll see you tomorrow. It's time again for Seth Holm to join us and talk about what's happening. Really exciting stuff. Seth, go ahead. Tell us what you got going on today.
Thanks, Kyle. Let's talk truckload earnings season. So Q3 earnings are about to kick off here. I've been reading a lot of notes from Wall Street on kind of what their thoughts are going into the quarter. Some good themes emerging here. Overall, the common theme is basically it's so bad it's good. So the first thing that everyone is universally pointing out is that they're expecting misses and guide downs. And we saw that yesterday with the biggest carrier in the market. But, you know, overall, in their opinion, that's actually a good thing because they think that 2020 is a trough EPS year that's developing here. And then the second main thing that they're pointing out is if 2020 indeed is a bottom and a trough year, then because these are cyclical stocks, you should get sort of a peak multiple. And a peak multiple for a trucking stock is sort of upwards of 20 times earnings. And meanwhile, these things are kind of trading in the bottom quartile and well below those 5-year averages. So it looks like a lot of upside from a valuation perspective. And you could get some earnings upside looking into the back half of 2020. Now, the other thing a lot of these guys were talking about is, you know, trucking stocks you really want to buy when things are really ugly and things couldn't look any worse. Now, we've probably passed that period. That was probably April or May for trucking, but we got a long way to go. Spot rates are still down meaningfully year over year. A lot of analysts think those are going to inflect positively in the second half of 2020. And then UBS touched on the fact, we talked last week about the ISM being at 47.8. That's recessionary. That's actually not a bad thing for trucking stocks because they tend to lead the market on the way down. So when you get a reading like that, historically, a year later, trucking stocks are up like 12% on average.
Let me ask you a question. Is this a extreme panic or is it a relaxed caution in terms of hedge funds or even inside of the trucking organizations themselves?
I think it's a calm panic. Is that the term you use?
Yeah.
I don't think it's a big deal. Basically, everything hinges on the consumer. So everyone who had a positive developing view of the trucking market basically hedged by saying this all depends on the U.S. consumer. And so I have a couple other points there on that may be worth touching on. So first off, we just got the September retail sales this morning. It was a little bit disappointing. It was down 0.3% month over month. That's the first time that's happened in 7 months. So a lot of people are worried that if you start to see those cracks in the consumer, we talked about it over the last week or two here, that is one that's building. So I don't think we're at an alarming rate yet, but we're starting to see them build. You just don't want to see them piling up with red flags. And then Morgan Stanley pointed out 2 others this week that I think are interesting. So first off, they noted, so a lot of people say, well, the housing market is extremely healthy, right? You have tight lending standards, you've got high FICO scores, you've got very low delinquencies and defaults, but what that isn't measuring is that 28% of the US consumers that are low income, they're being squeezed out by those tight lending standards and they're having to rent, and we're seeing a lot of inflation in rental prices, and that's kind of crimping those budgets. And then the second thing they called out was, so subprime auto loans are actually running above the peak that we saw in the credit crisis from a delinquency and default perspective. So when you pair that with the retail sales and those 2 things, you are starting to see a few more red flags on the consumer front. But overall, we think they'll continue to be strong.
Now, do you think this skews towards the lower income consumer sector, or does it encompass the entire consumer broad?
So that's the point they were making. They were saying that this could be early warning signs, a kind of a canary in the coal mine was the term they used that spreads elsewhere. For right now, high-income consumers are pretty good. Other than luxury items, a lot of that gets caught up in the China trade war, but overall the middle and high-end consumer with unemployment at 3.5%, kind of a 50-year low, everything looks pretty good.
Seth, thanks so much. A relaxed calm leading into the future. As always, thanks so much for watching FreightWaves Now. Be sure to hit that like and subscribe button. Follow us on Facebook, LinkedIn, and Twitter, and we'll see you tomorrow.
Everyone knows Chicago is the freight capital of the entire world. I don't know why you think Chattanooga is. It's not. Why are we even having a debate about this? Let's put this to bed. Chicago versus Chattanooga. Everyone knows it's Chicago. That's the birthplace of the logistics industry. You're going down, Craig.